While recording this video today, to be honest, even as I am sitting here, my palms are slightly sweaty. I don't know if you all are watching the market on your computers or phones right now. If you are, I believe you are feeling the same as me, both incredibly excited and a little bit in disbelief, even with a hint of panic about the unknown market moves. Just now, we all witnessed a moment that will go down in the annals of financial history. The price of spot silver not only broke through the $89 we were discussing a few days ago, it is like a wild beast that has broken its chains, smashing through the psychological barrier of $90 in one go. The latest quote has reached $90.58 per ounce, with a single day increase of over 4%. $90, my friends. What does that even mean? This means that if you had listened to me a few years ago and bought some silver coins or ETFs when they were in the $20-something range, your assets would have more than tripled. This means silver is no longer that little brother trailing behind gold's ass. It is staging its own king's return. Looking at this bright red number, my heart is filled with mixed feelings. I know that for us, seeing this kind of helicopter-like surge, what we feel in our hearts is often not greed, but fear. We'll think, is this a bubble? Is it about to crash? But then on second thought, we start to worry. Everyone is saying it is going to $100. If I don't buy now, will I be unable to afford it later? Will the money I have be worth less? This kind of anxiety, I understand it all too well. This is why I had to urgently add and record this episode today. In today's episode, I am not just going to tell you why it is rising, but more importantly, on what grounds it is rising. And in the face of these historic high prices, how we can protect our retirement savings, and even in this wave of wealth redistribution, stand firmly on the crest of the wave. We'll talk about the real situation with industrial demand. We'll talk about the movements of Wall Street funds. And finally, I'll give very specific, nanny-level operational advice. This episode is quite long, and the content is full of substance. So please calm your minds, make a cup of tea, give yourself some time, and listen as I slowly lay it all out. First, let's break down a core issue. Why was silver able to jump from $89 to stand at $90.58 overnight? The driving force behind this is definitely not as simple as the cooling inflation we mentioned earlier. Of course, the December CPI data released by the US was an important trigger. The core CPI dropped to 2.6%, which confirmed that the Fed must cut interest rates. But, friends, you need to understand one concept. The expectation of a simple interest rate cut can push silver to $80, but to push it above $90, another kind of force is needed called panic buying. What is panic buying? In the past, when we talked about panic, it meant everyone panic selling during a stock market crash. But the panic now is that institutions, fund managers, and the world's wealthy who are holding a lot of cash are finding that the cash in their hands is becoming less and less valuable, while high-quality assets, meaning those tangible things you can actually see and touch, are becoming scarcer and scarcer. What they're panicking about is not having any goods in their hands. Let's analyze in detail these three forces that push the sky. High price of $90. Driving force 1, a crisis of confidence in monetary credit and an asset famine. Right now, the scale of global debt has grown to an unmanageable level. The interest payments on US national debt have even surpassed the defense budget. This is a very frightening signal. The smart money in the market is starting to realize that no matter what the Fed says in the future world, the purchasing power of paper money is destined for long-term depreciation. In the past, what did people buy when they had money? Buy real estate, bias bonds, but now the liquidity of real estate has worsened, and the creditworthiness of us bonds is also starting to waver. At this point, is silver at $90 expensive? If it is measured in ever depreciating dollars, it is actually just returning to its proper value. Capital is looking for a Noah's Ark, and silver is that relatively cheap, and not yet completely filled boat ticket. So It is not that silver has gotten more expensive, but that money has gotten thinner. Driving force two, supply disruption anxiety in the industrial sector, a real physical shortage. This point is crucial and is also what I've been emphasizing for the past 2 years. This is the foundation of whether silver can hold steady at $90. The biggest difference between silver and gold is that silver is consumed. When gold is mined, 90% of it becomes gold bars or jewelry, locked in a safe. It is still on Earth, but silver is different. When silver is mined, more than half of it is used in industry. And once used, it is gone. Very difficult to recycle. Look, it is 2026. Now, what changes have happened around us in our lives? Electric cars running all over the streets, densely packed solar panels on the roofs, and the AI servers and smart home appliances that we can't live without. These high-tech products, every single one of them, needs to use silver inside. Silver is the most conductive metal, and currently there is no perfect substitute. In the past few years, because the price of silver was sluggish, many mines went bankrupt or reduced production, and no one was willing to invest in mining silver. Now demand has suddenly exploded, and for mines to restart operations and expand production, exploration, environmental assessment, and construction, it takes at least 3 to 5 years. This time gap in between has caused a serious supply-demand mismatch. The current surge to $90 is largely because purchasing managers in the global industrial sector are scrambling for goods. Like major solar companies, major electronics companies, they're afraid they won't be able to buy silver later, and their production lines will have to shut down, and the losses would be in the hundreds of millions. So regardless of whether the price is 80 or 90, they buy first and ask questions later, filling up their warehouses first. This is why we're seeing the price rise so fiercely, because it is supported by real, inelastic demand, side buying. Driving force number 3, Wall Street's game, the short covering. This is a bit technical, but I'll explain it simply to you all. In the financial market, there is a group of people who bet that silver will fall. They're called short sellers. They might have shorted silver at $85, $88. But when the price broke through the $89 key resistance level, these people betting on a fall completely lost. The futures exchange will tell them to add margin, and if they don't, they will be force liquidated. The so-called closing a position is when they are forced to buy back silver to return it. This kind of buying to admit defeat is very ferocious. They buy at any cost, just wanting to get out. This is like a stampede, which often causes the price to shoot straight up in a short amount of time, which is what we're seeing now. The scene of it breaking directly through $90. Many friends who've been through a lot might say to me, "I did! Those trees crashed before when silver rose to $50 and then collapsed." The hype was also out of this world back then, and in the end it all came crashing down into a complete mess. This time, as it rushes to $90, could it be another flash in the pan? Or even the last chance to get out? This is a very good question. And it is also where we must stay clear-headed and remain vigilant. We can't just listen to the positive talk. We have to look at history objectively. Won the story of 980. That was a man-made high-stakes gamble. That was the era when the famous Hunt brothers manipulated the market. Those brothers, by hoarding physical silver, drove the price up to the then sky high price of $50. But the foundation back then was weak, completely relying on speculation with borrowed money. In the end, once the regulators stepped in, raised margin requirements, and restricted buying, the price collapsed in an instant, and countless people lost everything. That was a man-made speculative game with little to do with the fundamentals. The story of 2011, the quantitative easing bubble. That was after the financial crisis, when America was crazily printing money, QA, and everyone was afraid the US dollar would collapse. So they bought silver, silver once again hit $50. But at that time, industrial demand wasn't as strong as it is now, and the solar industry was just getting started. When the US economy improved, the Fed said it would pull back the funds, so people no longer needed silver as a safe haven, and the price naturally fell back, a fall that lasted for several years. Today in 2026, a four-wheel drive supercycle. The environment we're facing now is a combination of the previous two, and even more complex. Is there a spec? Definitely. With it rising this fast, there must be hot money hyping it up. We need to be clear on that. Is there a monetary factor? Yes, the whole world is cutting interest rates. Capital is flooding the market. This is very similar to 2011. But the biggest difference is the fundamentals. In 1980 and 2011, we didn't have such a massive green energy industry and didn't have so many electric vehicles that needed to eat up so much silver. Silver now has already changed from a simple precious metal into a strategic material. So I think, although $90 looks very high, it might have stronger support than before. This isn't a bubble. This might be a re-evaluation of its value. However, this doesn't mean it won't pull back. Quite the opposite. Because it has risen too fast. The fluctuations in between will be very intense. It might rise 4% today and drop 5% tomorrow, shaking the timid people off the bus. This is why I've always told you all, friends with a weak heart or not enough capital, absolutely do not play with leverage. Don't borrow money to buy, because on the road to $100, there might be many deep pits now that we're done with the hard-nosed financial logic. I want to have a heart-to-heart talk with you all, my friends. This next part, I think, is more important than watching the market. We've reached this age, 50, 60, or even 70 years old. What are we investing for? Is it to compete with young people to see who earns more? Is it to enjoy that kind of heart-pounding excitement? I believe the vast majority of us are not. We do it so our retirement savings don't shrink. It is to have a sense of security when facing future medical expenses and living costs. It is to be able to occasionally take our grandkids out for a big meal without feeling the pinch. It is so we don't become a burden to our children. So when facing $90 silver, we need to have the right philosophy for our golden years. First, resist greed. Seeing $90, I know the little devil in many people's hearts has come out, thinking if I go all in, will it become $100 tomorrow? Will I be able to get a new car? This kind of thinking is gambling. At this price point, the market has already entered a frenzy, and risk and reward are directly proportional. If you want to earn that last 10% of profit, you have to bear the risk of a potential 20% pullback. Ask yourself, can you bear the heartache of losing 20% of your principal? If you can't, then don't be greedy for that last copper coin. Second, guard against fear. If you already have silver in hand, don't get scared and sell it all just because you see it has risen too much. Many people can hold on to losses, but can't hold on to profits. When they're stuck in a losing position, they hold on for dear life. Once they break even and make a little money, they want to run. But in the face of such a major trend, we need to learn to let the profits run. As long as the trend isn't broken, we should have a bit more patience. Don't sell today. And then when it goes up tomorrow, regret it and chase the high. That is the easiest rhythm to lose money. Third, stay level-headed. This is the hardest part, but also the most important. When it goes up, we're happy. That is a red envelope from the market. We can improve our lives a little. When it drops, we don't panic, because what we've bought are real, tangible assets, not waste paper. As long as it wasn't bought with borrowed money, time is our best friend. Silver sitting there for 5 years, 10 years. It is still silver and might even be more valuable due to scarcity. Your quality of life shouldn't jump up and down with the K-line chart. Outright. Next up is the part everyone's been most looking forward to, and also the most practical, the hands on application session. The quote is $90.58 US. What should we do? I am going to divide you all into three types of people. Please find which one you belong to. The first type, friends who already hold silver and at a very low cost. Congratulations to you. You are now the big winners in the market, the ones everyone envies. You are definitely struggling with a dilemma right now. Should you sell? You are afraid it will keep rising if you sell, and afraid it will drop back if you don't. My suggestion is use a trailing stop profit method. You can set your defensive price point at around 88 US dollars. Why 88? Because that was the resistance level from a few days ago, and after it was broken, it turned into a support level. As long as the price doesn't drop below 88 US dollars, don't sell a single one. Let it continue to charge upwards. See if it can hit 95 or even 100 US dollars. If by any chance the closing price drops below 88 US dollars, that indicates short-term weakness. At that point, you can first sell a third or a half, pocket your principal and some of the profit, and let the rest ride. This way, you can be on the offense or on the defense, which will give you the most peace of mind. The second type, friends who have some, but feel it is not enough and want to add to their position. This type of friend is the most likely to make a mistake. My advice is, don't add to your position during a sharp rise. Look, today it went up by more than 4%. If you rush in to add more at this time, your cost basis will be pulled up instantly. And with just one pullback, your mentality will collapse. You have to wait for what? Wait for a decent pullback. In this market, after a sharp rise, there is always a retracement. This is a pattern. If in a few days the price of silver pulls back to around 89 US dollars or even 88.5 US dollars, and it is able to stabilize without dropping further, that is when it is a good time for you to add to your position. This is called buying the dip, not chasing the high. It is better to miss out than to make a mistake. Category 3, friends who are completely empty-handed and want to get in the market. Now these friends face the biggest risk because if you get in at $90, your cost will be several times that of others. But I know you are afraid of missing out, afraid the cash in your hands will devalue. If you absolutely must buy, please remember the pyramid position building method. Absolutely do not go all in with your money at once. You can divide the funds you've prepared for investing in silver into 5 parts. It is $90 now. Buy one portion first and treat it as testing the waters. If it goes up, you've made this 20% profit. Don't regret not buying more. At least you were in on it. If it drops, say to $86, you buy 2 more portions. If it drops further to $82, buy more. This way, your average cost will be lowered. Remember, for someone with no position, at this point, protecting your capital is more important than making a profit. Special reminder regarding the choice of tools at our age. I don't recommend you guys play with silver futures or margin trading. The volatility is too fast. There is even a risk of liquidation and going to zero. That is a battlefield for young people to risk their lives. Not suitable for us. What is most suitable for us is still physical silver bars, fake coins. You can see and touch them, keep them at home or in a safe. And it is good to pass them on to your children and grandchildren. But the downside is that the buy-sell spread is large, cashing out is a bit of a hassle, and you have to find a reputable silver shop. Silver ETF, like the US stock SLV, or a silver ETF in the securities market. It has good liquidity, is convenient to buy and sell. Just like buying stocks, has low fees, and is very suitable for swing trading. Silver in a gold passbook, although there is no interest, it is very convenient to operate through online banking, suitable for slowly saving up in small amounts. Lastly, as your financial gatekeeper, I have to talk about the risks. We can't just look at the profits and not the pitfalls. Under what circumstances should we be on alert, or even consider exiting the market? Risk 1, the Fed suddenly changes its mind right now. The market expects interest rate cuts. But what if US inflation suddenly spikes up again? Or what if US economic data is suddenly incredibly good? The Fed might say, hold on, we're not cutting rates for now. At that point, the US dollar will surge and silver will plummet like a deflated balloon. So we need to pay close attention to the monthly CPI data and non-farm payroll data. If there are signs of a reversal, we need to reduce our positions. Risk 2. The exchange raises the margin historically. Many silver price crashes happened because the futures exchange suddenly announced an increase in margin requirements. This forces those who speculate with borrowed money to sell their silver to pay it back, causing a stampede-like crash. This kind of news is usually sudden, and no one can predict it, so we can't have our positions too full. We must leave some room, and don't operate with a full position. Risk 3. Technical false breakout. Although it has now broken through $90, if in the next 2 or 3 days the price can't hold firm and instead quickly falls back below $89 or even breaks below $88, then in technical analysis this is called a false breakout. It is a very dangerous sell signal, meaning the selling pressure above is heavy and someone is selling off at the high. At this time, you absolutely must not linger. When it is time to run, you run. As long as the green mountains are there is no need to worry about firewood. Dear friends, today's video is quite long, and I appreciate your patience in watching it all the way through. Witnessing silver surge to $90.58. We have witnessed history. But history is not just something to observe, it is something to learn from. In this turbulent year of 2026, wealth figures fluctuate daily, but the essence of our lives shouldn't be held hostage by these numbers. Investing in silver is meant to provide security for our later years, not to create problems for ourselves. Whether you are happy about making money or regretting not getting in on the action, please remember, health comes first, family second, and investing and financial management are only third. Having a healthy body and a harmonious family is the greatest wealth in life, something that no amount of silver can buy. This market trend may continue for a long time, and it might indeed reach $100 or even higher, as some analysts predict. But we have to take things one step at a time and eat one bite at a time. I'll be here with you all, keeping an eye on the market and being your most loyal observer. If you found today's analysis helpful and it gave you some peace of mind, please give me a like. That would be the greatest encouragement for me. Also, please subscribe to Gold Pulse and turn on the notification bell so you won't miss any urgent market changes.